Ladies and gentlemen, welcome to FinFluential Television. For those of you that are new here, this is how things normally go. I am going to say some things. The stock market will go and do those things. You'll make some money, I'll get some views, everyone's a winner, so let's go talk about some things. Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks rallied on Thursday with big tech leading the way as investors digested mixed signals from President Trump and his top advisors on tariffs. And it was another green day. I think this might be the fourth green day in a row coming off a very, very strong week so far. Stocks keep rallying and the sectors that keep leading are the magnificent seven names. Look at Microsoft up 3.4% today. Same with Apple up 1.78%. Amazon and Tesla for the discretionary space, both putting up days in excess of 3%. Look at Google, look at Meta, up 2%. And we're going to talk about Google's earnings after the bell. Some very big things going on right there. But we also saw participation in stuff like Netflix, Disney, and the entertainment segment of communication services. However, telecoms did not participate. But this is more of a defensive sector. But we still saw relatively positive developments, all things considered. In the hardware component of the market, we're talking Nvidia, ABGO, semis, semi-hardware, and software. Very, very positive, except for information technology services. And that's because IBM reported a shocking quarter along with Fiserv. They were down 18%. Very, very poor day from both of those names. Nonetheless, everywhere was very, very green. Financials participated, healthcare participated, energy participated. In fact, out of every single sector, only one was in the red, and that was Staples, a defensive sector. And if we look at the sectors that performed the worst, XLP Staples, XLU Utilities, XLRE, right? These are defensive sectors in the market. Even gold that was up today was sort of middle of the road, underperforming the S&P 500, which gained 2% on the day, with the leaders being the XLK, the XLI, technology, industrials, right? Highly sensitive, highly cyclical sectors, these growth sectors really leading the charge. And that's exactly what you want to see today. It was another day for growth value, mid cap, small cap, large caps, but really large cap growth taking the cake, up 4.1% respectively in that factor and size segment. But we saw growth outperforming mids in smalls, and really the underperformer here just came from the value component of the market. Nonetheless, if you were indexed to stocks as a whole, you probably saw a green portfolio, very positive day, particularly in the North Americas, Canada and the United States, very, very green. Same with South America. Europe was kind of mixed. Asia was deep in the red. China, India, Southeast Asia as well. And then we had a couple of green outliers here with South Africa, Australia, New Zealand, etc. And the reason why we were very green today is because India may be the first to sign a trade pact, says US Treasury Scott Bessent. He believes India and the US are very close to a trade. Stocks got off to a very early green start and kind of held those gains. This is very encouraging news because ultimately it's India, the EU, and China, right? These are the big trading partners, and if we can get a trade agreement for one, the rest will follow. Another reason why stocks were very green is that the economic data keeps surprising. For example, durable goods month over month, the consensus was for a 2% increase. We got 9.2%. It could be front-running tariffs. Yes, it could. However, you do have to understand that this is still good economic data, especially hard data. Durable goods is a great sign of the indicator. Now, ex-transports was a little bit weaker, but initial jobless claims came in at 222,000. That was the exact consensus. So look, the hard data telling us that everything is still okay. Now, existing home sales did miss ever so slightly, 4 million versus 4.13 million. And we saw a negative 5.9% month over month, but we were expecting negative 3%. And then we also got Fed Kashkari, who came out and said it's too soon to judge the interest rate path, sort of just saying the exact same thing that a lot of the Fed speakers were saying with regards to tariffs, the economy, and where they see rate cuts for 2025. That being said, while we did get mixed data, overall, it did lean to the positive side. And this economic data, along with some of the news from tariffs, led the market higher. Now, we also saw market movers that helped the market go higher, particularly here in the after hours. For example, Google was up 2% today, but they absolutely smashed earnings. Look at this. Earnings per share up 39.1%, $2.81 reported versus $2.02 estimated. That's a huge beat, as you can see right here. Still trading at a 17 times PE, up 4% or 5% in the after hours. The market loves these financials, and this is going to help the mega caps continue to rally. And in the FinFluential media video, we are going to talk about Google as well as Pfizer, which was down 18%. Could this be a buying opportunity potentially? Because they actually missed here on revenue ever so slightly, beat EPS, but the market did not like their guidance, I believe, and that's why they were down 18%. Possible opportunity because we're looking at a forward PE now of about 16 times. We're going to talk about them in FinFluential Media's video. We also got earnings from Intel after the bell. Now, they were up 4% on the day, down 6% in the after hours. Pretty good earnings, right? We saw an earnings beat as well as a revenue beat. We were looking for 1 cent in earnings. Intel reported 13 cents. Now, the company has a lot of structural issues that it's dealing with, but this is a move in the right direction. However, the reason why we were down in the after hours has to do with a poor Q2 forecast, which sent the stock sliding. And I think, in my opinion, the new CEO is sort of just sandbagging the upcoming quarters. And then we also had Pepsi before the bell. The stock was down nearly 5% today. Beat on revenue, missed on EPS. The forecast was not that great for Pepsi, and that is why the stock was down here in today. And then for everything we saw today, there was 4,800 advances, 1,400 decliners, very strong market breadth. We saw net inflows in the New York Stock Exchange as well as the Nasdaq, the S&P 500 up 2%, and it was just higher highs, higher lows towards the end of the day. And market momentum continues to remain very solid. The 5-day and 20-day are above the 50% mark, and we continue to see improvement here in the 50-day, in the 100-day, in the 150-day, and the 200-day. What we need now is continued momentum to go ahead and retake the 50% mark. If we can do that, you can assume momentum will continue to the upside with higher highs and potentially all-time highs. But to get those all-time highs, we need to see these numbers at 50% or above. Now, guys, looking at the charts, you could see that we had a very positive day. The S&P 500 up 2%. Same with the Nasdaq at 2.8%. The IWM performed as well. The RSP gained, but it underperformed the broad market. And ultimately, it was really just a day for large caps. But we did see mid caps, small caps put in a very solid day. We can see we're looking a little bit mixed here in the after hours. Because of Google, we see stuff like the Qs and SPYs up. However, that's been held back by Intel. Some of the semis are not acting too well. And then the RSP and the IWM kind of flat here in the after hours, but things looking largely pretty green. Those earnings from Google, absolutely fantastic earnings. I'm going to listen to the earnings call, and we're going to talk about it in the FinFluential media video a little bit later today. But we saw growth outperform value. No surprise there. Europe was kind of flat. Volatility continues to abate. Spot volatility slightly higher, and I expect this backwardation to meet contango a little bit later on this week, maybe early next week. And yields continue to drop. The 10-year yield at 4.3%, the 2-year yield at 3.7%. They all fell today. The dollar also fell, very interesting, and as a result, bonds did gain. Bitcoin was flat, gold was up 1.83%, silver was flat as well, WTI gained, nat gas gained. Now let's actually talk about the S&P 500 and everything we actually saw today. Now yesterday, and we said yesterday, we're looking for a capture of this 54.95 area. We are right there. We didn't see this level move up. Now, this is called the call wall, right? Based on the options market, this is a strong resistance zone, but also a magnet where equities tend to go to. So generally speaking, if we're above this yellow line, the equities will drift to this area right here. If we're below, equities will drift to this area right here. This is called the call wall and the put support zones, right? Normally, when we do get to this level, these lines for the call wall moves up. That isn't the case, which means we should see a little bit of resistance into the end of the week. However, if we can actually get a close above, then we can actually see the call wall move higher. And that would actually be good for this right here. Ultimately, if the market wants to move higher, it's going to have to retake this zone and have a close above. Ultimately, a weekly close above, tomorrow a close above would be very constructive for the overall markets for us to move higher. Also, we use it as resistance multiple times here, support right here and here. This is a very critical zone. So guys, this is how you're going to play the markets next week or in the upcoming weeks. If we can get a close above this level tomorrow, right, next week, we probably go higher. If we can't get the close below this level tomorrow, we probably drift lower into the middle of next week towards the gamma flip zone. It's as simple as that. Look for a close above, let's say the 5,500. We get that close, we're going higher. If not, we probably are going lower. And then this means we'll probably have to rebase, put in a higher low, and then go from there. Ultimately, if you're a bull, you want to see a close above the 5,500 area tomorrow. Very similar situation with the NASDAQ 100, right? We're right at this very, very critical zone. We just need one more day, push us above, close above, and then we go higher. If not, likely we're going to see resistance towards the 18,000 level. The RTY acting a little bit different. We actually didn't see the core wall move up. That probably will happen tomorrow, right? But we did see a strong move and a strong close above the 1922 area. So that means we probably go ahead and target the 2000 level right there. That's probably our ultimate goal. If we can have a weekly close above this level, we definitely can aim for higher prices here in the IWM, particularly the 2000 level. Looking at Bitcoin, we continue to track M2 money supply a little bit. Now, guys, don't forget, we do actually diverge from the M2 money supply, and that's exactly what's happening right now. But do expect a little bit of weakness here, maybe a little bit of a pullback, but do expect this move in aggregate to move higher over the next couple of months. We said for weeks now, late April, early May, we're looking for a move higher to follow the trend of global M2 money supply. That's exactly what we're doing right now for weeks and weeks and weeks. Even 2-3 weeks before this, I said you want to get into a Bitcoin position, and those that did, like myself, are reaping the benefits right now. And we are going to go higher. We are going to tackle these all-time highs. And even if you did miss the rally, guys, if we take a measured move, we're still looking at a 13% move to Bitcoin's all-time highs. And we're looking at a 35% move to the all-time highs we're seeing in global M2 money supply. The Chinese government did promise more stimulus, and this is why we're seeing global M2 money supply move significantly higher. So for Bitcoin, you want to remain long. You want to remain patient. We are probably going to get a pullback. So bulls, get this pullback. We're going to see some consolidation, and then we're going to move higher and onward and upward from here. So let's go ahead and remove this, and let's quickly talk about gold. Gold was up 1.8%. Guys, you know, this is a daily chart right here, and these look like weekly candles. That's how strong gold has been recently. But, you know, it does look like we're trying to form a bottom at this level right here. I'm personally not getting into gold. I'm in Bitcoin. That's going to be what I use for, I guess you could say, the commodity portion of my portfolio. I still am expecting gold to continue to move high. It is acting very well in light of risk assets, also acting very well, but this could be a one-day outlier. There's a lot of leverage that needs to be undone at these levels, and I think if we do get a pullback, I think, you know, the 3,150 area would be a great buying zone, and if we do break below that, ultimately, you know, the 2,900, looking at just some major support levels right here. So if we don't bounce here and move upright, we probably go lower towards this 2,900 area. Either way, I think if we do get to the 3,000 zone, great place to add gold, all things considered, especially with what we know this administration will do with gold and its revaluation looking 6 to 12 months down the track. Now, let's actually talk about stocks that I do like. Now, firstly, Evolution AB, they report earnings next week. What I'm looking for right here, guys, with Evolution is sort of like a pullback to this $80 range and then consolidation right here. And then earnings will determine if we go higher or if we break and go back into this chop zone. Ultimately, right, I have a very, very strong position in about the $72, $73 area. If we do go in here, I will continue to buy more, but what I really want to see, because my position is pretty full already, it's nearly 10% of my portfolio, I want to see us pull back, consolidate here, have great earnings, and move onward and upward. But I'm not trying to predict what's going to happen. I will react accordingly and deploy capital if needed. Another stock that I do like after we got some news from, I believe, Satya Nadella and a whole bunch of other CEOs, Andy Just, they said that AI data center demand is not slowing down. And I think this is a great place to get into NVIDIA. If you think you missed the rally, you have not, because NVIDIA, if we do measure it peak to trough, is still about 30% off their highs, and the stock still looks really, really cheap. They have earnings in about 2 to 3 weeks from now, and I can't really see the PE ratio, but the stock is still trading at about a 22 times forward. And if you think that's expensive, it's not, because that is the market multiple right now for probably the widest mode company and the leader in the AI space, and that is not going to change anytime soon. Another mega cap I do like is Meta Platforms. I own this stock. I own a lot of this stock. If we go into a recession, social media usage is going to increase. Meta is at the forefront of that. 3 billion active users buying back shares. It pays a dividend. I don't see how you don't like this name, trading at 17 times forward. And guys, if you think you missed Google, you did not. Their earnings were really, really good. This will probably take us back to all-time highs, not immediately. Let's see where we are in the pre-market here, post. Yeah, so we're at this level right here. So not a massive move after that earnings speed. I think you would have wanted to see a bigger move in Google. Nonetheless, there's a lot of uncertainty. Google doesn't provide guidance either way. That being said, I think if you are looking to get into a stock, get into Google. Earnings were great. They're buying back a ton of shares. They authorized $70 billion worth of buybacks again. The market loves to see that type of thing. And I think we're probably going to see the 200 level sometime again this year, early next year. So guys, if you're looking for mega caps, if you're looking for European stocks, look at Evolution, look at Meta, look at Google. If you want a healthcare name, a defensive name, look at Novo Nordisk. The stock also trades at 17 times. It has not acted well in the last couple of weeks, but I do think that this is probably a terminal bottom for this name. Just for the record, the stock is looking to grow 20% revenues, earnings at about 22% this year, and it trades at about 17 times forward earnings. An insane valuation. And the market is just afraid of a couple of things, Medicare negotiations and losing market share to Eli Lilly. But I think those are non-events. I think the stock can definitely work, and it's still going to print cash for like 5-6 years. Its patents are still 7-8 years away from expiry. There's a long runway in this name. And, if you are to take a measured move to get back to all-time highs, you're looking at like 135%. I do see all-time highs within the next 2 to 3 years for Novo Nordisk. But all in all, just going to quickly recap everything, guys. With the S&P 500, look for a move and a close above the 5,500 area. If we get that, we're going to go higher. If we don't, we're likely going to have price discovery in this area again. So don't try and predict what's going to happen. React and then go from there. And diving into sentiment, this is CNN's Fear and Greed Index. And guys, we are officially out of this extreme fear territory where we have been for the last couple of weeks. I would say the better part of a month. We got to as low as the single digits, and as fear has dissipated, as market breadth has expanded, and as the market has put in lows, we've moved from extreme fear into fear. And if we want to solidify those lows, we need to see a continuation of the markets moving higher, consolidating, and as sentiment abates, so too will the markets. This is very, very positive. And what's helping markets right now is earnings. Earnings season for Q1 looking very, very solid at 8.4% earnings growth, led by stuff like healthcare, tech, and utilities. And 75% of S&P 500 companies reporting above analyst expectations. Coming into this earnings season, we were looking for 7.8% in earnings growth. So we are beating expectations by a very, very wide margin. And what's also helping keep a bid in the market is corporate buyback authorizations. We can see here this is the highest number ever on a year-to-date basis, going even back to 2023, 2022. We've had $377 billion worth of buybacks. And this goes to show the confidence corporates have in the market right now to continue authorized buybacks for this year and into next year. And we are looking at a 19% growth year over year compared to 2024. This is very, very solid numbers. And diving into the macro, guys, the Fed's GDP now, their Q1 estimate is officially adjusted for gold at the zero mark right here, about negative 0.1. The blue chip consensus is slightly more dovish, slightly more bullish. However, we're looking to print a figure anywhere between 0 and 1%, maybe somewhere in the middle is the most likely scenario. This doesn't scream recession, but it definitely does scream growth slowdown compared to what we were aiming for at the start of this quarter. And if we are to see a recession, data prints like these are not going to get us there. Treasury tax receipts are trending higher than what they were in 2024. And this really just goes to show the disposable income and employee compensation increasing from 2024. And at the end of the day, if real disposable income is higher than inflation, consumers will generally keep spending because they keep building pricing power each month, each year, incrementally against the cost of inflation. And that's exactly what we're seeing right now. Tax receipts are coming in strong. That means incomes are coming in strong. And look, this is something we've seen in the last couple of weeks. We've seen that soft data has recently surprised to the downside, but the hard data has not actually reflected that. While these surveys may point out that things are brutal, the hard data is just not showing us that. And ultimately, this is what we want to look at. It's does the hard data translate into what the soft data is telling us? And if it does not, stocks will rally. And like I said, the hard data is just not showing us that just yet. Looking at data for tomorrow, the biggest print we have is the University of Michigan sentiment. We're looking for a number at about the 50 range. And then data tomorrow, we have SLB, AbbVie, Colgate, Palm Olives. That's pretty much it. Centene Corporation as well. But the majority of this earnings season is behind us. If you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.